Alright, thanks. I think it's time for big picture. As promised, today our guest is Gautam Chhaochharia, Head of India Research with UBS. Gautam, good morning. Thank you for joining us and thank you for being part of big picture today. So, to your mind, what could be the big picture for 2017? More constructive news flow or volatility, which will really knock us down more?
Good morning, Nikunjan, everyone. Volatility is obviously always a feature. There's nothing new. Will be there next year also. The big picture for us next year is about three things. One is global, specifically around the US presidency. And the two local factors would be obviously demonetization, how it plays out. But even bigger than that would be any policy response which we see in Feb onwards from the government and RBI. So that's the big picture we would be framing from our market view perspective, and these two are interlinked to some extent, the policy response and demonetization impact. The way we look at it, the broader market view and what's being priced in is the demonetization impact is going to be short-lived. The negatives will be short-lived, and it's a great long-term positive. Policy response, there is various chatter about the government responding positively to impact of demonetization to stabilize. In our base case view, we look at demonetization impact with or without policy response impact lasting 3 to 6 months. Beyond that, things should normalize. If we see a strong policy stimulus, then obviously there is upside to what we are looking at.
Gautam, hi, good morning, and good to have you on the show after quite a long haul. You know, the interesting thing, or rather the painful thing, is that not just that India is going through struggles of its own, but you know, in the recent Fed meet, Fed has indicated that come 2017, and they're going to be going about with 3 rate hikes as well coming in. And also, you know, the world seems to be in a bit of an unsettled scenario politically. We've seen that after the Italian referendum. You've got a new US president as well at the helm, and you don't quite know what Trump economics is going to, you know, take shape into. What is the sense that you're getting about, from a market perspective, how much of a return could Indian markets make? Because, you know, year to date, FIIs have had 0 returns from India. So what is the scenario that we're looking at? Are we looking at a 5% or a 10% kind of equity return market? Or do you think, you know, it could very well be a worse situation than that?
So the first point I'd like to highlight is, given the India-specific factors itself, there's always global factors which is difficult to comprehend, and specifically this year. But India-specific factors itself, in our view, makes the risk-reward or the range of outcomes quite wider than usual, because demonetization is a unique event, the impact of which we're talking about uncharted territory. And therefore, for us, the upside-downside scenario is quite wide versus what we normally see for any given year. And keeping that in mind, as a base case, what we are looking at is a single-digit return from current market levels in 2017. So high single-digit returns is the base case scenario for us. The upside-downside can be quite wide, depending on how demonetization plays out and depending on how policy response is.
So Gautam, the normal recourse. Good morning, of course, Neeraj here. The normal recourse that we hear is that now the budget could come up with some income tax benefits to consumers, and that will help negate the negative impact of demonetization on consumer stocks and consumer companies, and thereby on the market sentiment by and large as well. One, is it that easy for such an event to happen? And two, even if there are tax cuts that come in, can it actually help negate the effects of demonetization so quickly?
So yes and no. So the simple first point to remember always in India for last 3 years and even now is markets every year starts building in hopes that the budget will be great, it will provide support, stimulus, etc. But you have to remember that the fiscal space for the government at a macro level is very, very limited. So even if you look at FY17, if they achieve the fiscal deficit target of 3.5, so at consolidated level we are talking about 6.5%, which is right about where debt sustainability is for India as per IMF as well as RBI. So the fiscal space to expand is not there, and part of the reason why markets start believing stimulus, etc., is when we go back to 08-09 where the stimulus happened. But in 08-09 there were two things. One, your starting consolidated fiscal deficit was around 4.5 versus 6.5 now. So the room was quite a lot. And secondly, the entire global macro was in an expansion form. So that gave India a kind of credibility to expand fiscal dramatically. And remember that time India expanded fiscal by almost 500 basis point of GDP. So obviously we'll not see anything of that sort happening this year, but a small stimulus becomes a broader political economy and policy making call. Unless of course they get a big windfall in terms of higher tax revenues, etc. Demonetization linked disclosure scheme. So if that happens, that does provide them to spend more, but that is at a macro level simply a transfer rather than incremental monetary stimulus or fiscal stimulus in terms of money supply. And that will have a much more limited impact in the near term. The impact near term can be meaningful only if the government expands fiscally, for which the space remains limited, and we'll see whether the government wants to take a bolder step of expanding it dramatically.
Gautam, I'm going to ask you a specific question about flows. Now, flows post-November, they've been negative. The aggregate picture is that flows are drying down. There are outflows both from emerging market, from equities and from debt. Now, frankly, investing in India has been a popular theme, but that popular choice has not made great returns. This year, Indian markets in dollar terms, they've not given any returns. The last year returns have not been very promising either. So what are the chances that from an FI standpoint for 2017, we could actually see massive outflows? Because, you know, nobody wants to tag on to losers, and nobody wants to tag on to stocks which are expensive. And unfortunately, India has now, you know, come under that badge where valuations are high and performance is not there.
So that risk always remains. And an important point to remember here is when you talk about India story or India growth story. So one is in the relative context of emerging markets or the broader markets. That still holds intact unless we see a big oil and commodity bull market. So what we have seen till now is oil and commodities coming off very, very low price levels. But if that sustains into a proper bull market for oil and commodities, that can hurt India, because India is already an over-owned market, and these two also hurt India's macro fundamentals. The other part to remember is that if US etc. does very, very well next year, developed markets start doing very, very well, then any which way forget India, in general emerging markets lose a little bit of focus for investors globally, and allocations get hurt. So yes, that risk always remains, specifically given India is already an overweight market. But our discussion with investors also suggests most investors still look at India as a relatively good, solid growth story. So just because India has not delivered last year or last 2 years will not necessarily change that view, unless we start seeing impact of demonetization show up in negative numbers through the next year, not just for December, Jan, but through next year. In which case, obviously, these expensive valuations become very, very stark. So expensive valuations in itself will not mean market sell-off, but expensive valuations in the context of sharp earnings cuts and continued lack of improvement or even decline in high frequency data and macro data points, then obviously it can lead to a sell-off. So the big picture view would be, or to sell-off would come around if we start seeing, for example, March, April numbers to show negative growth trends for India because of demonetization.
Okay, now what we do on the big picture typically is speak to our expert about his thoughts on the markets or his preferred theme, and then try and get in one or two guests which are his preferred guests, his preferred companies, his preferred ideas. And Gautam, I think in our interactions, from whatever little we've figured out, one of the businesses that you like a lot is MCX as an exchange. Now spell it out. You know, we got the management as well, and he's joining in the discussion. But I first want you to spell out, why is it that you are so constructive on MCX as a business?
So I can't talk about individual companies, but generally speaking, for India top down, the themes which are always attractive to us are sectors where there is a lot of penetration-led growth opportunity over the longer term, where we have seen, despite businesses being around for a while, the penetration being still quite low. And secondly, where businesses can also benefit because of formalization, so shift away from informal to formal, aided also by GST and demonetization. So again, exchanges in general fall in both the camps, and that's one of the reasons why we continue to favor that as a sector.
Gautam, the challenge for a commodity exchange like India is that as of now there is no competition, but soon there is going to be strong competition. NSE, BSE. So the mort which currently MCX is enjoying, that will get threatened. And typically analysts, they say, look, when the mort is getting destroyed, the P multiples also will contract.
So again, not specific to MCX, but generally what we have seen globally in exchanges, exchanges are inherently monopolies because liquidity drives liquidity. So generally speaking, we don't see competition coming up just because there are more exchanges allowed to do that business. So for that competitive intensity to play out in the Indian context also is a low probability scenario in our view.
Okay. Let's talk about all of that with Mr. Mrugang Paranjpe. He's MD and CEO of MCX. Remember, we did speak to him fairly recently, but I think it's topical and pertinent that when we have Gautam Chhaochharia, UBS as a house believes that MCX is a great constructive story, that we get him and talk about the business and rehash some of the things as well. Good having Mr. Paranjpe. Thanks so much for joining in. Actually, let's start off with the point that Gautam was making and about businesses which have been around for a while, but are still in spaces where the penetration levels are extremely low, and therefore the growth could actually be significantly high for the foreseeable future for the next few years. Where are you on this topic? What would you believe the growth outlook to be purely coming in by higher penetration over the course of the next few years?
Thanks for this opportunity, and I think that's one topic which resonates very well with our own belief in the way the commodity markets are poised. I have held this view ever since I've joined MCX that we are very similar to the securities markets of the late 90s. We have today only one product, which is futures, and there is completely agreement in the market with regulators, with participants on what should be the roadmap for product expansion. So we will see options coming in, we will see indices coming in. I have said this repeatedly that it's a question of when, it is no longer a question of if these things will happen or not. The second point around penetration is in terms of market participants. Again, this market has had only corporates and retail participating for the last 12-14 years. We are now seeing the advent of mutual funds, AIS, etc., absolutely on the anvil, and the next step would be banks, insurance companies, and the larger players again. This has a multiplier effect because we also believe that bank distribution companies, the likes of security houses owned by banks, which are currently not distributing commodity products, would also be a big sort of enhancement to the distribution reach of this market. And last but not the least, some of the measures by the regulators, including SEBI's changes to the listing norms, which now require corporations to declare how much they are hedging in their balance sheets. So all of this points to a wider sort of expansion and much more penetration of the markets over the next 3 to 5 years. So absolutely agree with Gautam in terms of this being a very, very pertinent theme from a commodity exchange perspective in India.
Mrugang, hi, Gautam here. Good morning. To follow up on that,
hi,
specifically, we have seen So we have seen demonetization now playing out. We have talked about GST for a long time. So in terms of formalization, also, do you think there's an opportunity for exchanges to gain market share from the informal trading activity?
I absolutely agree, Gautam. And again, we've heard this theme now being spoken about by the regulators in the last couple of weeks after demonetization about short-term pain but long-term gain. This is again a theory which we would subscribe to. There have been many studies, some done by us in the past, some by other agencies, which indicate that the parallel market, the grey economy, the dabba, whatever we called it, has been a multiple of the formal market, especially when it came to derivatives trading in commodities. So even if a fraction of that comes back, would be a big boost. And again, there is every indication that as the new normal comes about after the demonetization, we should see in the longer run much more of that market come back into the formal trading. So longer run, definitely events like demonetization will help this market, and we are very, very happy about that as well. So and to your other point on GST, again, yes, sorry, on GST, just to add, one of the reasons why some of the deliverable markets have not developed is because, especially in base metals, we believe deliveries across India are a bit hampered in the current tax regime, and we are expecting GST to help that. we will be readying something in line with the advent of GST, especially for our base metal products.
But anything specific more you're expecting from the regulators or from the finance ministry to facilitate this just beyond this demonetization exercise or GST implementation, which can facilitate this movement?
So Gautam, it's been a long-standing demand from I think this industry that commodities transaction tax has been one factor which has triggered people's move away from the formal to the informal market. We believe this is a good opportunity for the government to revisit that angle. We have already given our sort of view on this to the ministry. We have backed it up with very independent research done by universities, done by the Indian Statistical Institute and the others. And our view is that we are not saying scrap it, because obviously there needs to be like a give and take, but we believe that a lowering of CTT will actually result in a much higher volume, not just of trading but of other economic activity, which will then be equal or more revenue coming into the exchequer. So we believe there is an opportunity now in the next couple of months, as the budget discussions are going on, where the government should look at lowering of at least the CTT to facilitate more people to come back into this market.
Mr. Pranjpe, I have two very basic questions. First, my understanding is that the timeline for options will get extended. I mean, none of the exchanges, I've been told, they are ready for it, one. And B, there's also a buzz that eventually banks and domestic banks and institutions will be allowed to trade in the commodity market. So first, can you share the timeline with us on when do you think options will be introduced? And somewhere in 2017, do you think institutions will be allowed to trade in the commodity market?
So I think exact timelines are something which is actively debated and spoken about at the CDAC meetings, and SEBI would have probably a much better view in terms of what those exact timelines would be. From our perspective, in terms of readiness, I would like to assure you that in terms of systems, in terms of operations, in terms of readiness for the products that we are speaking to the regulators, I think the exchanges are absolutely ready. MCX, we are absolutely confident that as and when SEBI makes the final guidelines available for options, we will be in a position to launch options. We also believe we are just in that last couple of days or weeks of the discussions. There was some discussions already within the CDAC, and SEBI should be coming out with something in the next couple of weeks. We are very hopeful to see clear guidelines within the next 2-3 weeks now from SEBI in terms of what they think the contract in options will look like.
Mr. Pranjpe, your stock has appreciated almost about 32% in just the last 6 months. And the going is the best right now for you. And the last time we were chatting with you, you said that global base metal rally along with oil price volatility has led to increased traded volumes on the exchange for you. And, add to this, higher agri and non-agri transaction charges have also enhanced your earnings outlook. Tell us, what is it the kind of, earnings outlook that you would project right now for the month ahead? And more importantly, how has the growth been over the last few months across these key segments of yours?
So in general, as you would be aware, we don't really give any sort of future outlook in terms of earnings. We've not done that in the past. But in terms of the volumes, I think when we spoke last time as well, I did mention that what helps us as an exchange is that we have a very balanced portfolio. So, a rally in zinc and other base metals helps us take the volumes up. It compensates for the fact that underlying activity in the bullion segment has been low in the last couple of months. So, that sort of balances off. But it is this sort of very, very what I would call naturally hedged portfolio that we have, which keeps our volumes in good range. We of course had, as we've discussed, a hike in our fees, which we did effective 1st October, which will help us in terms of our overall earnings as we go forward. But really, it's not something which we can give a guidance at this point of time.
And we appreciate that as well, Mr. Pranjpe. But so good of you to join us and talk to us about the big picture for the exchange business at large and for MCX as well. All the best for 2017.
Thank you. Thanks, Gautam. Bye.
Well, that's of course MCX on the big picture with UBS. And as we wind down this discussion as well, Gautam, so much appreciated. We've got your thesis, basic thesis for 2017, some of the key things that you're betting on as well. what are the fancied names or fancied themes that you're avoiding right now? It's easy to fall into a trap because a lot of people say that there is value buying happening here, things will improve if not good right now. Is there something that you firmly believe will not improve, something that is anti-consensus but you strongly believe in?
So again, a lot of it is stock specific, because what we have seen over last few months, or definitely for demonetization, the impact has been a lot more dispersed across stocks beyond sectors. So specifically the big sectors which will potentially get impacted by demonetization beyond the next 2-3 months are the autos, the discretionary, and the non-bank financials. And in these three, we see opportunities at the stock level, definitely, in terms of stocks which are mispricing in terms of extent of damage potentially, while the valuations have become attractive. And similarly, where we have seen stocks react less. But in generally speaking, we think, so for example, two-wheelers, we see the premium two-wheelers should be better off than the mass market two-wheelers in terms of impact and what the stocks are pricing in. Four-wheelers are very, very dispersed space, but again, market leaders should continue to do well. Non-bank financials is a much more trickier space, because the impact can be exaggerated the more we prolong the impact of demonetization. So with every couple of months of extension of demonetization, the impact on both balance sheet size, earnings, and growth rates becomes quite exaggerated. So it has to be a lot more dynamic and stock specific view there.
Gautam, really appreciate your time. Glad you could join us, and thank you for being part of Big Picture. That's Outlook 2017 Big Picture with Gautam Chhaochharia on where could be the mega trends and the big themes for 2017.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.